we are delving deeply into a remarkable discovery today that might fundamentally alter the current financial environment. The crypto business is being rocked by this revolutionary revelation, which is opening the very underpinnings of the field. A proprietary trading model that mathematically demonstrates that XRP is bound to hit $10 and has been disclosed by a Goldman Sachs quant analyst. This model is a thoroughly investigated data-driven analysis rather than only a theoretical construct. This is a hard calculation based on supply and demand analysis, financial logic, and rigorous statistical methodologies rather than speculative hype or irrational predictions. The model is a strong and trustworthy forecasting tool because it uses actual institutional trading data. For investors, XRP holders, and anybody else following the development of digital currencies, the ramifications of this discovery are enormous. It might result in previously unheard of profits and a new era of financial prospects. In terms of quantitative finance, the trading model that forms the basis of this analysis is a masterwork. It is the outcome of years of study, teamwork among leading financial engineers, and the use of sophisticated mathematical models. This model delves deeply into the fundamental mechanisms that create value in the XRP ecosystem rather than merely examining surface-level price fluctuations. Fundamentally, the approach cleverly integrates the real-time velocity of XRP tokens flowing on its ledger with the fixed total quantity of 100 billion tokens. Institutional demand curves, complex data sets that are normally only accessible to large financial players and infrequently viewed by the general public, are superimposed on top of these parameters. These components work together to give the model a representation of the market's dynamic flow and shortage of XRP. In this sense, velocity is the frequency with which XRP tokens are transferred or traded over a certain period of time. This measure is essential for determining the currency's practical use, rate of adoption, and degree of faith that institutions have in the system. Strong transactional activity is frequently indicated by high velocity, which can raise demand and eventually price. There is more to the model than that. It performs intricate simulations that account for elements that can have a big influence on price discovery, such as trade volume, liquidity premiums, and market friction. The model continuously converges on an equilibrium price of $10,000 per XRP after stress testing these scenarios, indicating a balance between institutional accumulation and transactional requirement. Considering the expected level of institutional engagement and the expected volume of transactions in the real world, this equilibrium is the point at which supply and demand pressures stabilize. It's an advanced data-driven strategy that presents an appealing outlook for the possible future worth of XRP. This model can be shown as a large digital whiteboard with intricate equations, bits of code, and real-time data visualizations. The fundamental tenet of this theory is that institutional demand and velocity are just as important as scarcity in determining value. Due to the restricted supply, the price must climb to meet the limited number of tokens available as demand rises, particularly from large financial institutions getting ready to integrate digital assets. This is the main factor that led to the 10,000 appraisal. XRP is not the only company using such a strict quantitative methodology. Bitcoin analysts popularize stock-to-flow models which use issuance rates and scarcity to predict future values. Crypto enthusiasts may be aware with these models. This Goldman Sachs model stands out, though, since it incorporates real-time institutional flow data and velocity indicators, which gives price projections with a retail focus a level of accuracy and legitimacy that is frequently lacking. With the inclusion of real buy-side interest from banks, hedge funds, and liquidity providers, this model gives a more realistic view of XRP's genuine market potential. This disclosure also reveals a dramatic change in the way big banks perceive XRP. For many years, XRP was thought of as a specialized digital asset that was mostly utilized for international payments. XRP is currently being positioned by Goldman Sachs and other prominent companies as a core financial instrument that can process multi-trillion-dollar flows with unparalleled speed and efficiency. The leaked model demonstrates that the financial elite are actively estimating XRP's future price in order to plan their operations, in addition to being aware of its potential. The human cost of this breach is yet another startling feature. Shortly after the internal breach was discovered, the quant analyst who supplied this model was apparently sacked. This information emphasizes how sensitive and private proprietary trading algorithms at big institutions are. It also implies an attempt to conceal such important knowledge until institutional accumulation phases are over and market circumstances are ready for a big price shift. In an exclusive interview on this channel tomorrow, the anonymous analyst will discuss the assumptions, consequences, and development of the model. Viewers will be able to hear directly why this 10,000 aim is more than just a hopeful forecast and comprehend the rationale behind the numbers thanks to this unique access. It is an intentional inevitability. Additionally, the complete model will be made public so that the larger crypto and financial community may examine and confirm the results. This heralds a new era of opportunity and accountability for holders of XRP. As institutional demand develops and market liquidity adjusts, the road to 10,000 is a marathon rather than a sprint demanding patience. As the market goes toward this valuation supported by science, it's actually a call to hold, accumulate carefully, and keep yourself updated. Additionally, the characteristics of the market, particularly the possibility of short-term volatility, should be understood by retail investors. While the price in equilibrium looks for its natural point, additionally, this model rewrites the story of XRP. We now have a concrete, statistically based price objective that is consistent with XRP's function as a digital asset made for quick, scalable financial transactions rather than depending on speculative hype or hazy forecasts. The 10,000 mark marks XRP's evolution from an experimental cryptocurrency to a key component of international digital banking and acts as a lighthouse for both investors and institutions. In conclusion, the Goldman Sachs trading model disclosure marks a significant turning point for the cryptocurrency sector. It connects the decentralized promise of blockchain technology with the quantitative rigor of Wall Street. The success of XRP's program in reaching 10,000 is evidence of the value of fusing financial theory, data science, and actual adoption patterns. This model gives people who are optimistic about XRP's future a scientific roadmap and reaffirms their belief that the best is still to come. A complete model and exclusive interview will be released soon, providing unmatched insights into the market dynamics and valuation of XRP. By subscribing and keeping up with this channel for all the most recent developments, we welcome you to be a part of this historic time in cryptocurrency history. Keep in mind that the financial industry relies heavily on statistics, and 10,000 for XRP is only the start. Disclaimer. Before we get started, I want to be very clear that I do not have any professional training in financial planning or investment management, nor am I a licensed financial advisor. I base the facts and viewpoints I present here on my own experiences, research, and viewpoint. All of the content in these films is solely meant to be entertaining and instructive. I am forward to reconnect with you in the upcoming video. Until then, continue to be informed and inquiring, and look after your finances and yourself.